Holy smokes everyone, subprime mortgages are back, and they couldn't be back at a worse time. Banks are getting very desperate as they're seeing house prices crash, especially these houses that they have as assets on their balance sheet, and they're seeing their balance sheets evaporate. We've also got news that we're seeing a record household wealth declines in the US. The global housing market is crashing, and people that bought their homes at the peak in 2021, well, they're having big regrets now, as they're seeing their homes drop hundreds of thousands of dollars in price, and some could be about to lose everything. So everyone, I've got huge news to show you, huge new data to show you, and huge important facts. So let's not waste any time. Let's get straight into it. Okay, everybody, look at this. Bank of America is launching a zero down payment mortgage program. And of course, they're saying they're doing this to help out minority communities. Well, if they really wanted to help out minority communities, why didn't they help them 2 years ago when housing was much more affordable? Why didn't they help them when mortgage rates were much lower of 2.5% to 3%? Why are they only saying they're launching this program now, right as house prices are starting to fall and they know a housing market crash is coming, and right at a time when sophisticated buyers don't want to buy in the market right now? Well, everyone, I think we all know why they're doing it. They're doing it to protect their assets on their balance sheet. These homes on the market that are slashing $10,000 off their asking price every single week, they're really doing it to save their bottom line, not to help out these minority communities. Again, Bank of America is moving forward with a zero down payment mortgage program called the Community Affordable Loan Solution. Not only will buyers be able to move forward with no money down, but they also won't face closing costs on their mortgages. So like they said, not only do you not have to put a deposit down, you don't have to pay any closing costs at all. This is going to be a complete disaster. But it doesn't stop there, everyone. The Community Affordable Loan Solution will be available in certain cities: Charlotte, Dallas, Los Angeles, Miami, and Detroit. And unlike conventional mortgages, there won't be a minimal credit score requirement to qualify. This is absolutely crazy, everyone. No money down, no closing costs, no minimum credit score. I don't know about you, but I think we all know this is going to end in disaster. But wait, there's more. Plus, mortgage insurance won't be required, and that's a good thing, as that can be an added ongoing expense for homeowners. Why do they even stop there? Why don't they say, you know what, we'll just give you this money to go and buy this home because we just create this money out of thin air anyways? Because that's how money is created, people. When a bank creates a loan, they're not using depositors' money, they're just simply ending digits on a screen, and then voila, this loan is now an asset on the bank's balance sheet and is a liability to you. Again, why didn't they bring out this program 2 years ago when houses were much more affordable if they really wanted to help out these struggling communities? Why are they only doing this now when house prices are starting to fall? And really, unfortunately, what I think this is going to lead to is a lot of negative equity, or a lot of these people buying these homes that may think, yes, this is finally their chance to start building wealth, when really this is going to lead to their home values being underwater. That's where they owe more money to the bank than the house is actually worth. Because I have some new shocking news that's happening to US households' wealth. Listen to this. US household wealth suffers record drop in the second quarter. US household wealth fell by a record 6.1 trillion in the second quarter, to its lowest level in a year, as bear market in stocks far outweigh further gains in real estate values, a Federal Reserve report showed on Friday. $6.1 trillion evaporated like that. And this is only the beginning, people, because this is lagging data. It is very likely that the stock market is going to fall further, and this record drop in wealth is when house prices have so-called been rising. But wait till you see the housing market in the US start to fall, because we are seeing it in many cities, but we have to wait until we get the data, and we also have to wait for this housing market downturn to be more broad over all states and all cities. And I'm going to go over in a moment of some stories of people that bought a home during the 2021 housing market peak and how they're now having huge regret. This fall was led by $7.7 trillion in stock market values as equities slid into a bear market in the first half of the year on worries about surging inflation and the Fed aggressive response with interest rate increases. The equity drop outstripped a $1 trillion gain in real estate values. So what people need to know is this is just the beginning. The Federal Reserve, like I've been saying, like I've been harping on about, is only just begun to lift interest rates, and they're nowhere near at the peak. And really, no one knows how high they're going to have to go to bring down this doubly high inflation. Guess why it looks right now that inflation has peaked? Well, we don't know what could happen in the future. We don't know what other black swan events could happen that could make inflation surge again. And it's looking very, very likely that the Federal Reserve is going to hike interest rates 0.75% again this month into the September meeting on the 21st or the 22nd of September. So guess what? That's going to be higher mortgage rates. I think the stock market hasn't priced in how high interest rates are going to have to go to bring down inflation. I think they're going to have to go to a minimum 4%. What this will mean is mortgage rates are going to be going to 7.5% for many borrowers. Yes, while you can get mortgage rates of say 6% right now if you got great credit, many people don't have perfect credit, and a lot of people credit scores during this downturn are going to get wiped out, especially when credit card debt is surging. A lot of people can't make their credit card repayments. Utility bills are surging. There's about 20 million households that are behind on the utility bills. People are falling behind on rent. Evictions are surging again. We're seeing 4 million households facing eviction. So these record price drops in household wealth we're seeing now are going to be dwarfed over the next 6 months, because here's more proof and more data that the housing market is in big trouble. Mortgage demand drops further as interest rates shoot back to their June highs. The average contract interest rate for the 30-year fixed rate mortgages with confirming loan balances increased to 5.94% last week, up from 5.8%. And listen to this, mortgage applications to refinance a home loan fell another 1% for the week and were 83% lower than the same week 1 year ago. That is insane, everyone. Mortgage applications to refinance are down 83%. This is why we're seeing these huge mass layoffs in the mortgage market. We're seeing huge brokerage firms lay off workers in mass. And with interest rates tipped to go higher, I think it's only going to get worse. As well as this, mortgage applications to purchase a home dropped another 1% for the week and were 23% lower than the same week a year ago. So not only are mortgage refinance applications absolutely plummeting 83%, this is a huge crash in mortgage refinances. We're also seeing mortgage applications to purchase a home, because many people say, well, yes, of course, mortgage refinances are falling when interest rates are rising. But not only that, mortgage applications to purchase a home are crashing as well. And if you think the housing market crash in the US is going to be bad, this is going to be a global housing market crash, because I have many viewers in Australia, Canada, UK, etc. And guess what? All these housing markets are going to fall all together at the same time. Look at this. The world's hottest housing markets are facing a painful reset. Frothy property markets are poised for double-digit price declines as consumers face mounting financial pressures. Did you hear that, people? They're going to be facing a painful reset. And could this all be part of the Great Reset's plan, by making utility bills so expensive, by making property taxes so expensive, by making petrol, groceries so expensive that people aren't going to be able to afford to repay their mortgages? They may think, hey, I've got $200,000 worth of equity in my home. Maybe I'll sell my home to use that equity to try to get by and pay off some of these credit cards, because credit card debt is mounting up. Maybe people think this is going to be the only option to get through this cost of living crunch, but are going to own nothing in the process. Economists are warning we will observe a globally synchronized housing market downturn in 2023 and 2024. And I completely agree. What people have to know is the housing market moves very, very slowly. It's not like the stock market where stocks can crash 10, 20% in a day, or the indexes crash 20% over 3 months. Housing market downturns tend to go on for years. Just like what we saw in 2008, the housing market didn't bottom until 2010, 2011 in many areas. I know when people watch these housing market crash videos, they want the house prices in their area to drop 50% next month. But unfortunately, people, it just doesn't work like that. You have to be patient. This housing downturn is going to take at least 12 to 24 months to play out. He warns the full impact of this year's aggressive rate hikes will take time to play out for households. Sellers often overlook signs of shrinking demand. And look at this chart here. House prices are now falling sharply across cities that saw the biggest gains. We can see here the pink line, Auckland, New Zealand, their prices are falling. Sydney house prices are falling. Stockholm prices are falling, and Toronto is starting to fall now as well. I just want to reiterate how important this is. Central banks have only just started to lift interest rates, so these price declines are going to accelerate once central banks get much more aggressive. And again, young families that bought homes in 2021 are going to be facing some real pain coming ahead. Young families that have taken on debt have never experienced in their lifetime a sharp rise in interest rates at a time when their real inflation adjusted wages are falling, and this could come quite a shock to them. That's right, people, we have a generation that has never seen a huge global financial crisis, that has never seen a housing market crash, that have only seen debt become cheaper and cheaper, and have never seen interest rates going up, and they're about to be dealt a lesson from the school of hard knocks. And something that's not being recorded in CPI is the cost of debt. For example, what's not included in the CPI or in inflation, but is going to be a huge increase in costs for families is, say for example, if their mortgage interest rate goes from 3% to 6%, they could be paying hundreds, if not thousands of dollars more in their mortgage repayments. If their credit card interest rate goes up, if their car loan interest payment goes up, this is an increase in cost of living, but it's not being recorded in inflation. It's going to be a huge pain for households. And at the same time, real wages are falling. They say inflation's great because you get a pay rise. What's really happening is people are only getting a pay rise of, say, 3 to 5%. Where their costs are increasing 3 times that of 10 to 15%. So people's standard of living is going backwards and their debt payments are going up. This is a recipe for disaster. While the US has less risk from resetting mortgages, the surge in borrowing costs in recent months has pushed price-squeezed buyers into more flexible loans that carry cheaper interest rates. This is a disturbing trend in the US housing market. We're seeing many home buyers go to adjustable rate mortgages now instead of 30-year fixed rate mortgages. And in Australia and Canada, most home loans are on variable rate mortgages. So we're seeing interest rates skyrocket, but what's going to happen in the US is a lot of borrowers are going to go on these adjustable rate mortgages, and then all of a sudden they're going to get a rude shock when after this adjustable rate mortgage period, they see their interest payments double or triple. The share of adjustable rate mortgages in loan applications jumped in July to the highest level in 15 years, according to Zillow Group Inc. data. I don't know about you people, but I think I've watched this movie before, with 0 down payments, 0 closing costs, 0 insurance payments, and now we're seeing adjustable rate mortgages. And this movie didn't have a good ending at all. Because look what's happening in Australia right now. My viewers in the US can learn a lesson from what's happening in Australia, because our housing market crash is going to be much worse than the US, because our housing market didn't have that huge correction or crash in 2008, and we are now going to have to face the pain. The alarm bells are perhaps ringing the loudest in Australia, where home prices in August recorded their largest monthly decline in almost 4 decades. While cashed up households have so far shown resilience to rising interest rates, a pinch point will come next year, with billions in mortgage loans fixed at record low interest rates coming up for refinancing in Australia. Fixed term loans tend to be for relative short duration of 2 to 3 years. And that's exactly right. When 2020 happened and you could get a fixed rate loan of below 2%, that's what I did. I locked in my mortgage at below 2%, but now that fixed rate period is going to expire. Now we're seeing many people go to mortgage rates of 4.5% to 5%. And with the Reserve Bank of Australia likely to keep on lifting interest rates, it could be even higher than that. And like I was talking about how people that bought homes during the 2021 peak are starting to face real pain, we now got a story of this lady that is a perfect example of this. That stands to hurt homeowners such as Miss Vetcher, a 30-year-old architect who dipped her toe into Sydney property market last May, hoping interest rates will remain at record lows. Now in Australia, the Reserve Bank of Australia was telling people, take on debt, go out there, buy a house. Don't worry, interest rates aren't going to go up until at least 2024. So a lot of buyers, they thought interest rates would remain record low, even though they knew that they probably couldn't afford it. I don't know why they'd buy thinking, okay, well, we can afford this home until 2024, then hopefully we can sell it for a profit. Unfortunately, this didn't work out for many buyers like Miss Vetcher. The price of everything from petrol to food surged. Loan repayments for a 2-bedroom apartment in Sydney West also started going up rapidly. And I don't know why you would buy an apartment in the city or really buy an apartment in many major cities, because there is so much saturation. All it takes is for them to build another apartment building next door, and then your property value gets devalued straight away. She's already paying $260 more a month for just 40% of the loan that was on a variable term, and the rates are tipped to rise still further. At the same time, the value of her home has taken a beating. Similar properties are being advised for around 70% less than she paid, meaning it'll be a while before she is in positive equity again. And unfortunately, it could be decades, because prices are only going to fall further. It's way beyond the property will ever be worth any time in the near future, she said. People, this is a very sad and unfortunate situation, and this is why it's a complete disaster what the Bank of America is doing to so-called help these minorities. Really what they're going to do is punishing them by getting them in mountains of debt right at the peak of the housing market in the US, and they're going to see their net worth actually go into the negative. So everyone, what this means is subprime mortgages are back, household wealth is shrinking at a record pace, mortgage applications are collapsing, mortgage layoffs are coming, we're seeing the global housing market downturn begin. This is only the beginning of this movie. I've seen it before, you've seen it before, it is only going to get worse. So if I was you, I'd start preparing now because things are about to get really ugly with the interest rates not even close to at the peak of what they're going to be. But everyone, what are you seeing in your local housing markets? Because remember, not every housing market is the same. Every single market will perform differently. What's going on in your markets? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.